Shares of CarMax getting wrecked. After reporting earnings and revenue that missed analyst estimates, the used vehicle retailer stock down almost 20%, hitting levels not seen since March 2020. For more, let's bring in CNBC's Phil LeBeau. Phil, what happened? What did they say about this?
Melissa, there was nothing good in this report. Really, when you look at the quarter, almost every key metric was poor. And even on the conference call, the CEO said month by month, the quarter got worse. Now, they believe they're better positioned now. But here's the bottom line. They missed on the top and the bottom line. Vehicle sales, in terms of the number of vehicles purchased or sold, either in retail or wholesale, that went down. And the loan loss provisions, they went up. And they didn't go up just a little bit. They went up by 26% compared to the same quarter last year. Do the math here. They see that the loan quality in terms of delinquencies and defaults, it's deteriorating, especially for those written in 2022 and 2023. And as you take a look at shares of CarMax, keep in mind that auto delinquency rate right now for the industry, it's at 2.54%. Now, it's not as high as it was back in 08 and 09, but it has gone up substantially over the last couple of years, which raises questions about the strength of the consumer and whether or not we're headed towards those types of delinquency rates that we saw back in 08 and 09. Against that backdrop, you might be saying to yourself, terrible time to be invested in the auto industry. Well, if you've been invested in the suppliers, you've done quite nicely, especially if you go back to early April. Remember when the tariffs were announced? That's when auto supplier stocks just got hammered and people said, stay away from them. They have outperformed the Dow Jones Industrial Average, S&P 500. They've been a steady performer since then, in part because they've been able to pass along tariff costs to the automakers who have had to have lower margins. They haven't been able to say, no, you eat the cost. Instead, it's the suppliers saying to the automakers, you want these parts, you want these components, pay the bill. And that's what's happened here. That's why you take a look at Visteon, Magna, Borg-Warner, Lear. All of these stocks have generally had a very nice performance since April, far better than a lot of other stocks, Melissa. But it just goes to show you, even though a lot of people are looking at the CarMax results and they're saying, oh, man, this is you want to stay clear of the automakers here for a while or the auto dealers, the suppliers have put in a really nice performance over the last 6 months.